Welcome to the Wall Street Crossover Show, brought to you by Tip TV in conjunction with our sponsors, Admiral Markets. It gives me great pleasure once again to reintroduce Mr. Darren Sinden, market commentator at Admiral Markets. Darren, how are you, sir?
Yes, very well, thank you, Nick.
In terms of the markets, it feels like a slow grind down. People are worried about the yield curve, they're worried about interest rates, they're worried about geopolitical, and the tape never lies. It looks as if sentiment has changed almost overnight.
Yes, well, you know, we said on Monday that we felt that equity markets could have a further correction, and that certainly the path of least resistance still remains downward. Not entirely sure what the catalyst would be. I have to say, Merrill Lynch in a strategy note though this morning did say, you know, beware a sharp bounce, and I suppose, not that I'm looking for one, but given that we've had, you know, a big correction in indexes like the DAX, you could envisage perhaps some resolution to Greece, for example, creating quite sharp relief. Yeah, it could do that, but I don't anticipate that just for the moment.
Right. Okay, so let's go to the first slide. Data released over the European session. What's caught your attention this morning?
A little bit thin again on the calendar today, but I picked out three items that are probably worth mentioning. First of all, Eurozone GDP for Q1. This is the second read, so if you want the real look at the numbers as opposed to the flash preliminary read. So it came in at 0.4%, or growth I should say, versus the forecast of 0.4%, and lo and behold, dead in line with the flash reading of 0.4%. Plus, these things are always subject to revision, but I guess, you know, it's modest growth across the Eurozone as a whole. Not a clear sign yet, I think, that QE is working, but at least it's a positive number rather than a negative one. Speaking of negative numbers, the next item, Swiss CPI, or Swiss Consumer Price Index, the inflation numbers, if you will, in Switzerland for May. We looked at the year-on-year measure, down 1.2% over May 2014. That's actually in line with the forecast of negative 1.2% and the prior read of minus 1.1%. But what it tells us is that deflationary pressures are still bouncing up in Switzerland. And then for our own economy here in the UK, the balance of trade, so the net differential between exports and imports, came in at just over minus £8.5 billion. That was better than the forecast, minus £9.9 billion, and a big improvement on the prior month, i.e. March, of minus £10.7 billion. So you could read into that the economy is gradually coming back into balance, although it's fair to say that we generally do have a deficit here because we are really a net importer of so many things these days.
Understood. Okay, so let's take a look at the FTSE 100 movers.
Picked out a couple here. First of all, Reed Elsevier, up 2.3%, and just simply on a jolly old upgrade, you know, an old style broker recommendation. Barclays upgrade to overweight. Say the stock trades on a discount to some other cyclicals. I think I'm right in saying they say it's around 17 times earnings, and they pick out things like Unilever and one or two others that are potentially trading on multiples north of 20. So by Reed Elsevier is their view. And then Vedanta Resources, no longer a FTSE stock, but I picked it out because it stood out in the crowd as one of the only miners actually up on the day. They're up 5.23% on an Indian press story that suggests that a merger between Vedanta, which is an Indian company, and Cairn India is a possibility. Cairn India apparently has got a big cash pile, which would be beneficial to Vedanta's balance sheet. So if that went ahead, that would be good news perhaps for Vedanta shareholders, and the markets responded accordingly.
About 5%, understood. Let's turn our attention to M&A, rumours and movers this morning.
Okay, well, it's a bit of it's so much of a rumour because I think there's not really a news story, but Procter & Gamble is selling off, well, it's P&G these days, but I can't shake off the old name. That's P&G, the ticker. It's selling off some of its unwanted businesses. Its beauty business in this instance, a deal worth about $12 billion US dollars. It's all coming to a bit of a head now. Bids have been submitted. Bidders have said to have included Henkel, German chemical company, Coty, the US cosmetics and perfumer, and several PE firms that are interested, KKR, Clayton Dubilier Rice and Warburg Pincus, all sniffing around these businesses. The hair care business, which includes the brands Wella and Clairol, well known obviously for hairsprays and hair products, that's in Henkel's sights, and they're expected to have submitted a bid somewhere between $5 to $7 billion, whereas the fragrance business, and that includes licensed brands such as Boss, Gucci and Dolce & Gabbana, should fetch somewhere over $5 billion, and it's Coty which itself only floated in the last couple of years, that's looking to buy those. This fast-moving consumer goods area is certainly seeing a share of M&A in the last couple of years, and it's all about majors realigning portfolios and focusing on where they see the value. And PE firms, private equity firms, are looking for hidden value in the brand.
Right.
And it's, you know, a real sort of contest to say who's actually right.
Understood. Let's look at US data points that are coming out today. We know it's a quiet week, isn't it? Is there anything?
Well, I wouldn't say scraping the bottom of the barrel, but we're not looking at the first tier of economic data here. But we've got our old friend, the Red Book chain store sales, which comes out on a weekly basis. The read at the end of May was plus 1.6%. So we're looking for hopefully something at least there or above. Having said that, we are effectively back in a downtrend on the longer term chart there. And then in terms of the other number, the wholesale trade sales and inventory number, looking for a forecast. This is basically anything, any sales and any building inventories registered by wholesalers in the US, and we're looking for a gain of plus 0.3% versus the prior 0.1%. But this figure has been in decline for a considerable amount of time.
Right.
I think in 2011 we were seeing reads of plus 1.8%. So
well off the top.
Absolutely so.
Understood. Let's turn our attention to the US pre-market movers and some chart levels.
Okay, well, I picked out one that just leapt off the page for me to set the ball rolling as far as pre-market movers are concerned, and it's called Aoxing Pharma, AXN US the ticker. This is a modestly sized Chinese pharmaceutical company that's actually listed in the States. They've gained approval from China's equivalent of the FDA to produce Tilidine tablets. Tilidine is an opiate painkiller, and the market really likes that. So they were better in yesterday's trading as well, but pre-market they're up again significantly. It's a real game changer for them. And then something a bit more sedate, Lululemon. People might remember them for the scandal of the see-through yoga pants from last year.
I've got to say, I don't remember that. But
fair enough, but it was big news stateside. So they've had a torrid time after a product recall and some bad publicity, but they produced better than expected Q1 numbers yesterday, and they're called up just over 2.8% pre the market. In terms of levels to watch today, obviously, as you said at the top of the show, equity markets continue to be under pressure. And so for FTSE now, we're talking about a downside, further downside potential through 67.35. Upside would need to get back above and stay above 68.05. I think that in itself tells you something. We were talking about levels north of 7,000 not so long ago. Yep. The DAX continues to be under pressure. 10,830 now the new downside level. 10,950 the upside. A wide range here, but again, ignoring the obvious trend, we are looking for for cues to move it perhaps the other way. S&P 2072 now on the downside, and that 2100 number. I was going to put that as the upside, but to be fair, 2090 is a better read ahead of that, so look for a potential move above there. Having said that, the early call was for weaker US markets, and for the Dow, 17,780 plays 17,817. That's actually tightened up quite nicely, so quite a decent range to watch there. Euro dollar 112.12 now at downside level, 112.80 the upside. My guys that really follow these technically fancy a bounce again in euro dollar. Aussie dollar, US dollar, 76.45 to the downside now, and 77 even I've gone for there on the upside. Dollar yen, yen has strengthened slightly against the dollar in the last couple of sessions, so 123.70 now is our downside level, but I pay close attention to 124.24 on the upside. That might be the catalyst for a move higher. And finally in cable, a little bit firmer perhaps after that balance of trade numbers, 152.68 now our downside level, and 153.10 to the upside.
Okay, so basically equity markets weaken, and it looks like a little bit of dollar strength in there. So, okay, Darren Sinden, market commentator, Admiral Markets, thank you. That wraps up the Wall Street crossover show. We'll be back at 1 p.m. tomorrow. Have a good day. Thank you.